I'll share the slideshow for today. I want to emphasize the difference in between pre-approval and the pre-qualification process and the difference. You guys all see the screen? Perfect. Okay. So we've been in the business long enough to know the difference in between the good loan officer and the great loan officer. You know the rate, term, fee, and you know the programs. You know how to pull the credit. But why is that two loan officers with identical product knowledge can be in the same market and one closing 8 to 10 deals a month while other is scrambling just for 1 or 2. So it's not about the rate sheet. It's not about the lender relationship. I think it's about, I don't think it's about the referral source either. Not yet. It's the space between knowing what to do and knowing how to make people move. So today we're going to do a deep dive with master loan officer protocol that I can think that can use different level of businesses. So this is not about the beginner's guide. We're going to detail of operating systems, building the loan officers who are doing business into a business owners who's doing reactive business and ready to take full ownership of every transaction they touch. So I'm going to talk about 3 things today. Let's see. Yeah, let's talk about this one. So I'm going to talk about 3 things. One is anatomy of persuasion, the techniques that separate people from client remembering a loan officer into people who cannot forget. Second, the fastest engine to homeownership. Use pre-qualification and pre-approval as a weapon so that we can tell the differentiation. For example, when a borrower says, I don't want to pay for the credit report, I don't want to pay for anything, I don't want to provide any documents, how can you persuade this person to lead into a homeowner? How can we educate the homeowners, potential homeowners, and the realtors to get to the next level? 3, master's domain, the art of common sense and flexibility, including reading the situation with precision and acting where others freeze. So this is the first topic that I want to bring in. Here's the most common mistake the experienced loan officers make. After a few years of this business, you acknowledge the knowledge, you understand what kind of product, what type of situations that you can apply. Lots of it. You know too much now. You understand the DTI ratios, overlays, agency guidelines, non-QM structures, buy-down programs. The whole toolkit is now ready. Then you walk into a client meeting and you dump all of it on the table. And this is called, I want to call it a curse of knowledge. The more you know, the harder it becomes to communicate simply. The simple communication, the elegant, sharp, fast communication is a simple and single most valuable skill in this profession. The client sitting across the room for you are not coming in for a lecture. They need a decision. They need someone who can hold hands with. So your job now is to give them one clear answer with faster, simpler approach. So let's talk about the 5 techniques that made the possibility. Rule number 1 is simple. No matter how complex, how difficult the loan structure is, do not go over than 10 minutes. I don't care if you're explaining 2 buy downs, a bridge loan, or a non-warrantable condo situation. The essential message that client needs to walk away within the 10 minutes must fit inside the 10 minutes. Why? Because at minute 11, attentions collapse. All the attentions that you wanted to get disappears. So when the attention collapses, trust collapses within. So here's the discipline. Before any client meeting, I want you to write down 3 sentences. 3 sentences that capture everything the client needs to know to make a decision. Not 3 paragraphs, 3 sentences. So if you can't do it in 3 sentences, you don't own the material yet. You don't understand fully what you need to accomplish. So go back, simplify, and come back when you can say it with cleanly. Short, so confident messages are how authority is communicated, not the volume, not the complexity. Okay? And second, the unexpected insights. When you hear something that you didn't expect in the meetings, that's when the engagement come back. So visualization, presentation always come into play. So when you start the conversation with today's rate, 30-year fixed at 6.875, do you know what this sentence is worth? Zero, nothing. It's a garbage. This is what every mortgage loan officer's website, financial news feed, rate alert start from. And that's where people just walk away from it. When your newsletter, text message, notifications come from this rate, people don't their engagement. They don't start, clicking on their content. So don't start with try to translate that data into a decision-making process. So instead of telling a client the rate, show them the side-by-side. Always show them with a visual guide. What does program A cost them over 5 years versus program V? What is the exact month? The specific when buying down the rate actually pays off. So pull out the tax benefit card, the OBB, the $10,000 versus $40,000 out of pocket monthly cost, before and after mortgage interest buy reductions. When buyer says, I can afford the $2,400 a month, and you show them their net monthly cost after tax saving, which is actually $1,950 or $2,000. When you show them the breakdowns into charts, that's when the conversion changes. So you're not doing the math. You're doing a magic into this transaction. How do we do it? Use ChatGPT, Gemini. Don't try to make it on your own. Use the AI protocols that we already have. Feed them in, educate so that you can have the answers back. Third, when the numbers fade, you tend to go back to it, but don't do that. Try to create a storytelling with 3 checklists, 3 sentences that you have made up front. So when you talk about the framework, when you talk about the client conversation that ends with a 3 checkpoints, 3 takeaways, that's when you can go back to the conversation. That's when you do the one-on-one reading with the client. So where they're being financially hurting, having difficulties, trying to down pay X amount from which down payment portions, everything matters. So I want to give you an example. This borrower came in trying to rate shop me for the hard money loan product. But after we find out that the 401k features cannot be sold until February of 2027, borrower stopped shopping. Now I'm giving a rate of 10.25 and borrower committed to sign the loan documents with us. It's not about the rate. Other people have 8 and 9. It's not about the term. I'm giving them 12 months term when others are giving 3 to 5 year term. I'm charging 3.5 points when others are selling at 1-2 points. So when you explain to them financial breakdowns of the reasons why, after listening to them actively, creating a storytelling, then you can have anticipated confidence and draw out the results that you want. Coherent narratives. Clients are not going to ask you and second guess you with financial structures that you have created with them. So what do we need to do? What do we need to understand, right? You need to talk about the rate lock timing. With non-QM and QM, there's a specific 15-day all the way to 45-day rate lock period. And our rebates grow, but at the same time, if you accidentally miss this 1 or 2 business days, you end up paying the same amount for the 30-day rate lock. So I want you to explain to them the pros and cons of short rate lock versus the longer rate locks. So it's okay to give 15-day rate locks, but if you give them, $1,000 to $2,000 lender credit, and if you create a digital footprint showing the Instagram and Reels and YouTube Shorts that these are actively happening with today's market, you can encourage that to bring in additional files and relationships. Let's talk about the pre-qualification, pre-approval. Now, as we understand what 5 matters to talk about, within the 10-minute rules. Let's be very clear about this confusion. Even nowadays, it still comes up, even among experienced loan officers. Pre-qualification and pre-approval are not two versions of the same thing. They are fundamentally different instruments. They are fundamentally different market. So a pre-qualification is a hypothesis. It's based on what clients tell you verbally with no verification, with no documents, with no credit pull. It takes 10 to 15 minutes of this discovery call, and it means almost nothing in the competitive market. So a listing agent who sees a pre-qual letter sees a piece of paper that basically says, someone asked, and we said probably, yes or no. It's not a definite answer. Pre-approval, on the other hand, is a fact. With Giving Tree pre-approval letter, we are guaranteeing funding with a $2,000, give back to the seller in case it doesn't work. And some of you who I know who's not using the page 2 and 3, the funding guarantee statement. But once you understand and once you structure the loan correctly and adding in the second and the third page pre-approval letters, guaranteeing that you, loan officer, giving away $2,000 to the seller, you can encourage your agent to bring up the potential, the closing ratios. Pre-approval letter requires W-2, pay stubs with verified asset, and a hard credit pull, not a soft pull. It has been reviewed, valid. You can actually give out 10, 15-day escrow that can come in a credible lender with a credible loan officer that backs up personally, calling to listing agent after offer is submitted, so that you can create relationships. You can compete with full cash buyers with this. So side by side, if you look into this chart, pre-qualification has stated income, stated asset, stated everything. It has no leverage, no weight. And anyone who understands what a pre-qualification letter means will not have a chance to win. So we shouldn't even consider a soft credit pull. We are seldomly, or most of the loan officers are leading to think that soft pull is a way to, I guess, start the relationship, start the talk. But when you are talking with highly motivated buyers, highly motivated realtors, don't even bring it up. Bring them with a pre-approval and how important this can become a gold nugget. Pre-approval can take hours. Sometimes it takes a full day because it requires you to review the full documentation, and you can now calculate maximum offer leverage, maximum sales price, maximum loan amount, and the difference between winning and losing with multiple offer situations. So with Giving Tree, we do not introduce buyers and agents with pre-qual and pretend that it's a pre-approval letter. That burns relationship once it's found out. That wastes the agent's time as well and cost the buyers a house. Let's assume that we pull a soft credit report showing 720 and then end up later finding out hard pull credit showing 680. Rate change, fees can change because of a discount point that will wreck the relationship later on. So turning documentation reluctance into action comes into understanding what type of loan product do we need to apply to. Is it a full doc W-2, or is it a 12-month bank statement, or is it a P&L? It takes time, but we have to practice getting into this situation so that we can handle the conversation. And writing down what you are expecting to the loan officer, to agents, to homeowners. We don't have to apologize anymore, and we don't have to negotiate. You, the loan officer, now reframe the entire thing as if it's in their interest. You're doing a favor for them because it is, right? So right now, this is a market. I think it's a survival mode that everyone's going through, right? So let's have a different mentality, equipping our homeowners and the agents with pre-approvals. It is difficult. It's not easy, but maybe that's why we have a higher chance to win. So what I want to encourage to everyone is use a common sense. In Korean, is yudori. When a buyer is trying to walk away from you, don't nudge pre-approval. use a pre-qualification and get it involved. But when you deliver the documents, try to deliver pre-approval letter instead. When I call the listing agent and tell them that I'm open to do the cross qualifications, you have no idea how many pre-qualification letters and immature offers that they are receiving and they are getting. So get into this mode. Talk to the listing agents. Let them know that our service and our specialty is ready to go, ready to help them. When they receive 10 different offers, how can Giving Tree loan officers help them to reach them from number 1 through 5? Top 3 offers based on what, right? So start with a pre-approval every single time. Can lead into home buyers, selling agent, but at the same time, listing agent as well. So why do I emphasize this today? If you understand this mechanism, we have so many down payment assistance programs. We can ask the listing agent to do the collaboration, marketing together on Instagram and YouTube, right? So as the listing agents are worrying about all these homeowners just stepping in, leaving without any commitment, can lead into this roadmap of how to say yes, how to create businesses, how to win on every single dimension so that we don't have to and we don't worry about all these failures. So I want all of us to understand how the processing works, how the loan submission to underwriting works, so that we can understand fully, so that we can protect our clients, expand the relationships, converting the relationships into opportunities by not negotiating, but persuading. The reasons why we are better. Relationship business is working. I'm not going to put it down, but agents move to different lender all the time. Deals die all the time, right? So we just have to understand the mechanism, how to identify what we need to do, what we can do, and then exponentially grow. We have all these online presence and I guess features available. One of the examples that I want to share is a borrower coming in at 44% DTI. Agent just wants to know how we can save this deal. But I didn't realize this loan officer was charging 2 points with 7.25% rate. So when you understand the home ready file, LLPA completely removes. This file is converted into 6.5, and I got the deal. And I removed the origination fee. And then my rebate is still at 2 points with that loan amount. So if you understand the loan type and the structure, you don't have to send it to regular 30-year conventional. You can send it to home ready file. LLPA completely is removed. So amateur response will be, unfortunately, we need to collect the document. I don't know the current DTI, so I can tell you the approval status over the phone right now. Can turn into, yes, here is what my findings are. As long as you bring in this income, this asset, this credit, then we can give you XYZ. The penalty is, so the borrower is saving thousands of dollars over the life of the loan. And you, the agent, can now encourage to actually get into the offer because payment is now within the target payment that the borrower actually wanted. I do a lot of one-on-one with individuals right now. I know I emphasize how I am doing can be very different than how you are doing. But I don't want to discourage this gap. We do this training, we do this meeting so that we fill in the gap as much as possible. I don't want the clients to walk in, call in, and then leave because of the misconception, misunderstanding, and misleading information. I want all of us to be on the same page. So we don't have to accept any third-party options. Don't ask the agent. Don't call the brokerages and say, consider as a second option. No, we are the first. We can be the first option because we are better. We offer the lowest rate with lowest fees. Because on the loan sifter, we have so many different options available. Okay? Any questions? I'll share the slides with you later on. This is a presentation that I did yesterday with another brokerages. It was a company asking for a down payment assistance program, but instead of talking for a down payment, I talked about the relationship and the importance of a pre-approval, because about 80% of the buyers that were sending in, the agents were acting as a loan officer. They were sending me PDFs, asking me to become this call center loan officer and do the one-on-one reviews. Heck no, I'm not going to sign up for that stupid relationship business. However, instead of killing the relationship, I went above and said, hey guys, for all these people who doesn't have an NMLS license, step away. I will get involved. I will assign someone who can help you doing this business. And surprisingly, they liked it, because when you work with a company, especially with Zillow Flex guys, they want immediate answers. They want the responses right away, whether it's right or wrong, because those buyers will also walk away from them until they write the BRBC. So reaching out to listing firms, reaching out to the Zillow Flex teams, reaching out to all these realtors who consider you as a stepping stone, or I don't know, Matt, what kind of pronouns that you want to use? Let them consider. Doormat, thank you. Let them allow you to step over you. But when you have an opportunity, that's a new beginning. A lot of us don't even have a chance to show that we are better than them. They don't give us a chance. We tell them that we have a better rate. We tell the agent that they were, I guess, deserving them by pairing with a retail lender, getting a higher fees and higher rate. But surprisingly, these realtors don't want to know more. They don't want to accept more. They say they don't need additional services because they're okay. They're satisfied with what they have. That's why, team, we have to record. We have to post content. We have to deliberately, intentionally, exponentially grow with digital platforms. Okay? Do not engage with 10 businesses. That's done. That's over. Don't try to do it within yourself. Try to. During pandemic, all the people who migrated into online presence are thriving. Anyone who's still doing one-on-one businesses, text messaging, phone calling is dying out because our relationships, our realtors are dying. They're getting hard time. So we cannot rely our businesses to one bag of one situational business. Harrison and I will be available for all the persona content creation, all the ideas, and for the next couple of weeks, we will start posting the materials that we share into a group chat as well, so that you can cherry pick some of the slideshows that you want to use, and then feed it to Gemini, and then repurpose the content into your own. But whichever way you want to lead the conversation into, I want to, think of into a director perspective. Before you post the content, what do you want to get out of it? Do you want relationship, or do you want the followers? Do you want to relate all the homeowners or to the realtors? If you want a specific result, you need to start with a specific intent. So I want to end our training with that. Thank you for hopping on today. Have a great week, and I'll see you all next week.
Thank you very much. Bye.